It was a long time in coming, and it's a basic redoing of the agreement that was done before, which was a very unfair agreement for the United States. And I think that President Moon and myself were very happy. It's great for South Korea. It's great for the United States. It's great for both.
That is President Trump announcing he reached a trade agreement with South Korea, but tensions lingering with Canada and China. Looking also at the Federal Reserve. Fed's going to raise interest rates by the end of the week. Are we in for a market turnaround? Joining us right now is CFRA Research Chief Investment Strategist Sam Stovall and DoubleLine Global Developed Credit Portfolio Manager Monica Erickson. Great to see you both. Thanks so much for joining us. Let's talk first about this South Korea deal. Significant, Monica, how do you think these factors are weighing on markets right now?
Well, I think in our markets, I think having some kind of clarity with trade is important. I'm not looking specifically at what is going on in South Korea as how it relates to our markets. I'm not entirely sure that in the short term it's going to have much of an impact. But I just, again, having certainty in terms of trade is very, very important.
Yeah, Sam, I mean, the China story is really big for these markets, but the market would be a lot worse off if it believed that the president would not have some success. Procter & Gamble just added its name, though, to the list of companies warning about tariffs. It says that the tariffs will hurt sales, raise prices, as well as put jobs in jeopardy. What's your take on that and the impact on the broad economic story?
Well, Maria, certainly we've had the overhang from trade be with us for quite some time. And I think we get a little bit of inklings that maybe things can be resolved. We did have the agreement with Mexico recently. We most recently also had the trade deal with the Koreas. So I think a lot of investors believe that there will not be a major trade war that takes place between us and Europe as well as us and China. Obviously, we're preparing for the third quarter earnings reporting period. All 11 sectors in the S&P 500 are expected to show year-on-year gains, but Procter & Gamble being in the consumer staples sector, that growth is likely to be in the mid to single digits. So I think companies are sort of setting themselves up so that they have an excuse if they end up missing the mark.
So Sam, just give us the numbers. What are you expecting for S&P 500 earnings for the third quarter? What are you expecting from S&P 500 earnings and revenue for 2018?
Expectations are for about a 22% gain in the third quarter in earnings. Primarily the energy, financials, materials companies likely to show the strongest double-digit gains. For the full year, again, 22% rise with about an 8% increase in revenues. Going into 2019, however, growth is still going to be positive, but the growth rate is likely to be cut in half, up only about 10% in earnings and about 5% for revenues.
That's for 2018, 5% revenue, and what'd you say on earnings, Sam?
So for 2018, it's 22% revenues, 8.3%. Sorry, 22 for earnings, 8.3 for revenue. Next year, 2019, it's 10% earnings and 5% revenues.
Wow. Dagan, these are great numbers. Everywhere you look, you're looking at strong profit numbers as well as job numbers. The economic backdrop, obviously, is going well.
Yeah, absolutely, Maria. I was just looking down and looking at these numbers that Sam was going through. But again, the comparisons get harder and harder. And I think that if you moving into 2019, as you get this headwind from the tariffs, and there will be a headwind, and you've heard warnings. Procter & Gamble's the latest, but Walmart, for one, writing a letter to the White House, to the Trump administration about this very thing, that the comparisons, depending on the sector, do get a lot more difficult to put up that kind of double-digit earnings growth.
Yeah, it's a good point because, John, we haven't really seen the impact of these tariffs yet in terms of rising prices. But at some point, Walmart says it's going to happen.
Well, Walmart gets hit really hard by the fight that we're having with China because so much on Walmart shelves is coming out of China. So I think that's something that the market has really been pricing in for most of this year. One of the things that I'm looking at is the Fed. So we have a Fed meeting this week. They're going to raise rates again. But something I'd like to throw out at Sam is there's there's the possibility that the Fed stops this rate increase cycle sometime next year. The market is saying the Fed only has a couple more rate increases in the pipeline next year, and the Fed is saying it's more like 4. Sam, my question to you is, how does the market respond if the Fed says, you know what, inflation isn't moving anywhere and we're just going to stop these rate increases in 2019? What does that mean for stock prices in 2019?
Well, I would actually think that that might not be good, because the implication is that the Fed has not put enough arrows into its quiver with which to fight the next recession. Right now, we are looking at interest rates that are below the rate of inflation. Traditionally, Fed funds is about 1.5% above the rate of inflation. So we still have a long ways to go in terms of raising rates to get back to a more normal rate-inflation relationship.
All right, we'll leave it there. Sam Stovall, Monica Erickson, great to see you both. Thanks very much.